Welcome back. Nvidia just lost close to $600 billion in market value today, making it the biggest one-day loss in US stock market history. The stock was down nearly 17% today. This comes after the news that DeepSeek, a Chinese AI company, reportedly spent $5.6 million to develop a large language model that performs better than ChatGPT. In this video, I want to talk about some of the claims that DeepSeek is making, what this means for US tech stocks, why they traded lower today, what we can expect for their future, and as the video title suggests, why I believe this is a huge buying opportunity for Nvidia. First up, DeepSeek is a company that specializes in developing open source large language models. Recently, the company released its latest AI model, the R1 model, along with reports that it performs better than leading AI models from OpenAI, Meta, and Google in some cases, at a fraction of the price. DeepSeek has become the most downloaded app in the US App Store, taking ChatGPT's throne. Now, DeepSeek's first claim is that it spent only $5.6 million over 2 months to develop its latest model. That is a fraction of what leading US companies have spent to develop similar models. US companies have spent hundreds of billions of dollars on AI infrastructure over the last few years. However, it's important to note that China is subject to US export controls, which is designed to limit its access to advanced semiconductors and GPUs that are critical for developing artificial intelligence technologies. So they could be not disclosing that they do have NVIDIA's latest H100 chips, just like US companies, but we don't know that for sure, so that is all speculation at this point. However, Scale AI CEO Alexander Wang came out last week and said this.
So, the Chinese labs, they have more H100s than people think.
And these are the highest powered NVIDIA chips that they were not supposed to have.
Yes. My understanding is that DeepSeek has about 50,000 H100s, which they can't talk about, obviously, because it is against the export controls that the United States has put in place. And I think it is true that, I think they have more chips than other people expect, but also on a go-forward basis, they are going to be limited by the chip controls and the export controls that we have in place.
And that claim seems to be backed up by Elon Musk on X, who replied, obviously, to a post quoting Alexander Wang from the video we just watched. 50,000 H100 Nvidia GPUs would put them at the scale of Tesla, making the $5.6 million claim pretty much impossible. As for how DeepSeek got these chips, I'm not seeing any official reports, but I am hearing rumors that they might be buying them from companies in Singapore. Again, this is speculation and no official reports or evidence have been released. But also, apparently, the CEO of DeepSeek and its parent company, a hedge fund called Highflyer, was buying thousands of NVIDIA chips as a part of an AI side project in 2021 before the US export controls were put in place in 2022. So who knows what they actually have. So what does this mean for US stocks and NVIDIA, and why did they collapse today? Well, if a Chinese AI company just made a large language model comparable to the best models in the world for a tiny fraction of the price, why would we need more NVIDIA chips? Why would the biggest companies in the world, Microsoft, Google, Amazon, Meta, Tesla, continue to burn money on chips they don't need? There will be no need for NVIDIA H100 or Blackwell chips, and demand will be lower. That seemed to be the general consensus among investors today. I obviously don't personally believe that, given all the information we just went over, but I don't know. Let me know what you think in the comments. But also, think about this. Why would China announce a $138 billion investment in AI infrastructure to rival the United States if progress can be made so cheaply? It just doesn't make sense. Regardless, large language models aren't the end goal. There are so many advanced models now that they've essentially become commoditized. I think that's why Meta open sourced their Llama model, simply to advance it. The end goal is AGI, or Artificial General Intelligence, which is essentially AI that would possess the ability to learn, understand, and apply knowledge on its own. Pretty much mimic human-like cognitive abilities or even surpass human cognitive abilities. That being said, large language models are just the start, and plenty of companies seem to be able to make them. Focusing in on NVIDIA again and the argument that demand will drop for NVIDIA chips, Satya Nadella tweeted something interesting today. He said, Jevons paradox strikes again. As AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity we just can't get enough of. I had no idea what this was, but he left a link to a Wikipedia which explains that in economics, the Jevons paradox occurs when technological advancements make a resource more efficient to use, thereby reducing the amount needed for a single application. However, because the cost of using the resource drops, overall demand increases to the point where total resource consumption actually rises rather than falls. Governments, both historical and modern, typically expect that energy efficiency gains will lower energy consumption rather than expecting the Jevons paradox. And in simple terms, Satya Nadella is hinting at the fact that as AI becomes more efficient and cheaper, instead of reducing the demand, it could actually increase the demand for NVIDIA chips. So yeah, demand for NVIDIA chips could increase instead of decrease. It's definitely an interesting point of view, and we'll just have to wait and see what happens. To get other perspectives, let's take a look at what Wall Street was saying about NVIDIA today, starting with Barry Bannister, who has a more negative take on the situation.
Our next guest says DeepSeek is a legitimate disruptor. He's out with a new note highlighting 3 bad signs for the market that could even push the S&P into a correction later this year. Barry Bannister is chief equity strategist at Stifel. He's got the lowest year-end target on the S&P across Wall Street at 5,500. Nancy Tengler is still with us as our guest host. All right, Barry, I think you and Nancy, I mean, you are like 2 very different points of view here, so this could be fun. But give us the, I hate to call it the glass half empty take, but explain to us how you see a path towards a significant correction here.
Yeah, keep in mind that even on a good micro story, macro sometimes rules, and the market's pretty much ignored the macro on the AI hysteria the last, year. But the macro is starting to catch up. Inflation is sticky. I don't think the Fed's going to cut rates again. Frankly, the 10-year yield's too low if inflation proves very sticky and the Fed doesn't cut. And price earnings multiples just got too high. And I think we had to let some air out of the balloon. And we come down on the side of about 10% lower by the late 2025.
So, Barry, you don't look at this and go, power stocks 30% off, leading chip stocks 20% off. This is a top 3, as Dan put it, buying opportunity.
No, it's definitely not a buying opportunity. I have some trouble with the way that the big tech companies with monopolistic cash flows are redeploying the cash into from a high ROIC business to a low return on capital business, even if it has the unit sales growth and the initial build out of the models to the S&P 500 type companies. It's going to have a very competitive landscape. And are they going to earn this capital return that they need, or should they have just given us the money back instead of spending it?
Barry, it's Dom. One of the big questions facing many investors today is this fear that this could be the triggering of a larger sell-off, one that we haven't really seen in quite some time now, aside from the 5% pullback that we got over the last couple of weeks entering here. Is there anything that would suggest to you that anything else could trigger any kind of a broader market decline at or near record highs like we are right now?
Well, over 30 years ago, we used to joke about how technology was such a displacement event business where new competitors would come in and destroy the entrenched stocks, that it deserved a lower multiple because of that. It's a short life cycle business that's got a very short competitive advantage period. But investors forgot about that. They bid up the stocks. The growth relative to value, large cap total return, one divided by the other on a 10-year compound basis, reached the absolute outer limits of the past 90 years. And that exact limit line is exactly where it peaked, the price earnings multiple and the outperformance of growth. So for us, it's just a very bubbly, ebullient market that's just got to take some air out of it.
Okay, that was the negative take. Now let's hear from Dan Ives, who has the exact opposite take. He says this is a golden buying opportunity for NVIDIA. So,
are the doubts around the AI trade justified, or is today's sell-off just a buying opportunity for some of these names? Joining us for more is Dan Ives, the global head of technology research at Wedbush. Also here with us for the whole hour is Nancy Tengler, CEO and Chief Investment Officer at Laffer Tengler Investments. Thank you both for being here with us right now. Let's talk about, Dan, the epicenter of all of this. And you've been a notable bull on many of these companies, many of the technologies that are at the center of the meltdown today. Does this worry you?
I mean, in my view, it's a top 3 buying opportunity that I've seen in the last decade for tech. And the reason I'm saying that, I spent the whole weekend talking to tech executives, CIOs, individuals that I know that are going down the sort of AI arms race or going through use cases. In no way of really 25 companies does this change their sort of plans, and a lot of these could be 7, 8, even upper 8-figure type budgets. I just continue to view this as it's a model, and a lot of the details I think still need to be vetted out in terms of 6 million. Do they actually have the H100s, how they actually built it? But this is something we're going to look back on, and I think the street and the market got this way wrong. In no way does it dent our bull thesis. That's what we've been telling clients really since the weekend. These are the times you own these names.
Dan, not all of the companies at the center of the sell-off today are necessarily affected the same way. Chip stocks, Nvidia, Kelly mentioned it, $500 billion in market cap lost. That's more than the size of ExxonMobil. That's roughly the size of United Health Group in terms of an entire company lost in market value. Some are affected more than others. Mega cap technology, not as much so across the board as, say, Nvidia per se. When this is a buying opportunity, how much of a buying opportunity and how specific do you have to be?
Well, first on Nvidia, that continues to be, I think, the golden goose in terms of what Jensen and that company are ultimately. There is one chip in the world. There's one GPU that's fueling AI, and it's Nvidia. And when you think about these build-outs, when we talk about the enterprise, the $2 trillion of AI CapEx next 3 years, that doesn't change from DeepSeek. We're talking about 1/1000th of ultimately the build-out that you're going to need for a lot of these enterprise use cases. You look at names like Palantir. You look at the hyperscalers. I could argue with inferencing, if you actually think costs are coming down, it's actually bullish for even some of the software players, names like Salesforce, ServiceNow, Oracle, and others. I just think this is when you look at NVIDIA, I think we sit here 6, 9, 12 months from now and look at this as a moment. It was a golden buying opportunity, and in no way changes our bull thesis for where this is all headed.
That was definitely a more bullish take on the whole situation. Lastly, let's look at this video highlighting Stacy Rasgon's take on this.
Let's try and get more answers now and bring in top chip analyst Stacy Rasgon of Bernstein. It's great to have you on a very important day to speak with you. What do you make of this story? What is the worst drop for NVIDIA, at least in years?
Yeah, you bet. So I spent a lot of time this weekend, most of my weekend looking at this. We knew it was going to be a circus today. That was pretty clear, just given everything, all the takes that were there in the Twitterverse. I had sort of 3 conclusions. It's my own conclusions from this as a semi-informed layperson around this. But number one, I think the big issue was that the headline, the initial takes that came on this was, oh my God, China's duplicated OpenAI for $5 million, which is categorically not true. We can talk about what they did, but they did not train this reasoning model for $5 million. That did not happen. We can talk about why. But number two, how did they get the efficiencies that they did? These are very, very good models. Like, I don't want to discount that. But the types of things that they did, they're not miracles. They're a mixture of experts, and they did some very interesting with something called multi-headed attention, and they use lower precision calculation. These are all things that are known, and all of the labs are all working on, if not deploying already. So there was nothing here that was like unknown to anybody else, like in the AI industry. Like, these are not miracles. Finally, like number 3, I personally think, we'll talk about this, I think that this is clearly a panic today. I think it's overblown. The school of thought here is that, like, oh my God, these are so much more efficient. Like, we don't need as much investment. So number one, we actually don't know what they're spending to train the reasoning model that's causing the angst. My suspicion is quite a bit more than what they did to train the base model. And number two, you got to remember, like, I'm a semi guy. Like, I actually view cost reduction as a good thing. We want adoption. Like, in semiconductors, again, I'm probably biased, but like, cost fell by a factor of 2 every 2 years for 50 years. It was not a bad thing for semiconductor. It was a fantastic thing for semiconductor, man. Unless you think that we were already close to saturation in terms of the amount of compute that was going to be required for AI, we need these kinds of innovations and efficiencies, because otherwise, like, you're not going to be able to get to where they're going anyways. And so I think this was already happening. I think it needed to happen. And I can make, I think, a very clear argument that the more efficient things get, the more demand we will have, not less. So I actually think over the long term, this is a good thing, not a bad thing. But clearly the market disagrees today. So that is what it is.
I mean, Nvidia hasn't been afforded the multiple it has, nor the stock price, for that matter, on the idea of a commodity. Has it? Hasn't it been rewarded the way it has on the idea of the best, of a moat, on some level of exclusivity, at least now?
Well, the issue here is not that. Where is the commoditization and the? It's not the chips. It's the models, right? So again, if your business model going forward is we're developing AI models that we're going to sell to the general public, maybe you worry. Like, I don't know. It doesn't mean that, like, the folks that are doing this still don't need to buy a lot of chips. I think they're going to still go to buy a lot of chips. And by the way, what did we see last week as all this was happening? We saw Facebook, or Meta, I guess, massively take up their CapEx guide. We saw all the Stargate stuff. We even had China actually announced a 1 trillion RMB, so like roughly 140 billion US, a program for AI investment in China. This was all last week, right as all the DeepSeek stuff was happening. DeepSeek's not new either, by the way. The V3 model, the base model, was actually released on December 26th. Like, none of this is new. None of this is surprising to any of the large US guys that are spending all this money. They're spending it anyways.
Yeah, but I mean, NVIDIA's future in some respect is leveraged to the development, the production, and the success of Blackwell. If the company is telling you I'm going to read a comment from a spokesperson at NVIDIA, which I think speaks to this, and we can discuss on the other side, where they say DeepSeek's work shows how new models can be created, leveraging widely available models and compute that is fully export control compliant. Now, you could read that and say, well, is the company admitting that you don't need the latest, greatest, most expensive chip to do what DeepSeek appears to have done?
No, I don't think that's what they're. So they're making a statement on China here because that came out of China. But look, you're going to have, like, if you're getting a massive proliferation of models, frankly, of all shapes and colors and sizes, you're getting adoption. This is over time what we want. Right. This is not, again, this is not a bad thing. You're going to hear this a lot today, probably already, but there's a concept known as Jervin's paradox. The idea is as efficiencies and costs come down, like, demand more than offsets. I keep going back. You know, I went to the Hot Chips conference a couple years ago, and Bill Daly, who's NVIDIA's chief scientist, was giving the keynote. He was actually talking about performance improvements in GPUs. And he talked about, like, over the prior 10 years, NVIDIA had improved GPU performance by like 1,000x. It was a bunch of things, process tech and architectures and sparsity and lower numerical precision, all kinds of things. But what he said in that keynote was, like, over the next 10 years, we want to improve the GPU performance by another 1,000,000x. Like, again, unless you think that we are at the limit of what the compute that we need, I think this is a good thing. And if you look historically, we've never, ever had enough compute. Like, I've got the data going back even before AI was, like, taking off, just looking at, like, sort of installed compute in the data centers, like in MIPS and millions of instructions per second. I have this data going back like 30 years. It was growing at 50% a year forever. It never stops. So I'm personally not of the belief that you can have enough compute. I think if we're getting efficiency gains, which I think we need if we're going to meet the compute demands that AI and accelerated compute are placing on us, I think that we're going to get absorbed. I think we need this.
Okay, so my take on this whole situation. I think there are serious concerns and possibilities we need to think about, like what this means for NVIDIA selling to markets like Singapore or other markets that China has access to. Is the US going to ban chip sales or chip exports to those markets too? I mean, that could really mean a slowdown in revenue in the short term. In the long term, though, I don't think this is going to affect spending on NVIDIA's chips. As we've seen in recent earnings calls from the big tech companies, they're spending more than ever on AI infrastructure. On top of that, Trump just announced the $500 billion AI infrastructure project, Stargate. China announced another $138 billion AI infrastructure spending. On top of that, autonomous vehicle advancements have been top news lately, and I think that's going to continue. And there's so many other applications for AI, which I'll actually talk about in an in-depth AMD video that I've been putting together and will post by the end of the week. In that video, I talk about AMD, the semiconductor market, and the future applications of AI and semiconductors in general. So subscribe so you don't miss out on that one. So what am I doing? If you've watched any of my previous videos, you know I'm investing heavily in AI and semiconductor companies right now because I believe it's the next wave of technology and we're still just at the very start of it. Today, my portfolio was down about $1,600 or 2.28%. Nothing crazy. However, as you can see on the right side here, I did buy Nvidia today. I'm really just betting on Nvidia's resilience and the continued demand for cutting-edge chips. I deposited $3,000 in the account, which is on top of my $500 weekly deposits. I also took some profits here on PayPal. I only sold about 15 shares, bringing my total shares to 100. We're sitting on a nice almost 60% gain in the past year or so. But this leaves me with an additional $1,700 in funds that I can deploy throughout the week. This Nvidia buy is a partial buy, and I'll most likely add more shares throughout the week. I'll most likely bring this position up to at least $5,000, regardless of what happens. However, if Nvidia happens to trade down even further in the coming week, that'll probably be much more than $5,000. You know, in my opinion, the stock experienced short-term panic today. And for the various reasons we discussed in this video today, I don't think this is the end of Nvidia, and I do think it's a great buying opportunity. The stock market doesn't give discounts often, but this is one that I'm taking advantage of. That'll be it for this video. See you in the next one.